Strategy, the company formerly known as MicroStrategy, is also seeing the downside of that, down 4% today and down 38% for the year. They popularized, maybe we could argue innovated, the crypto treasury model with their Bitcoin holdings. Here to talk us through it is Strategy CEO Phong Lee. Phong, it's great to have you here. Welcome to the airwaves.
Thank you for having me, Kelly and Don.
So, look, we all know that as long as the price of Bitcoin goes up, your company does quite well. What happens when the price of Bitcoin goes down or even just goes sideways?
A few years ago, this would have sounded insane. A public company betting its entire financial future on Bitcoin. But that's exactly what Strategy, formerly known as MicroStrategy, did. While the world obsessed over short-term price swings, one man quietly kept buying. CEO Phong Lee wasn't chasing hype, he was executing a plan. And recently on CNBC, he hinted at something most people never saw coming: steady Bitcoin accumulation behind the scenes, even when the market looked broken. Here's the part that shocked Wall Street. Their average Bitcoin entry price sits near $72,000. And they didn't stop there. They kept raising capital through equity and debt, not because they were desperate, but because they were confident. Even during the brutal 2022 crypto winter, when fear dominated headlines, buying didn't slow. It accelerated. Why? Because the long-term data told a different story. Bitcoin has historically delivered over 40% annualized growth across multi-year cycles. And Strategy was positioning for that future, not today's noise. Critics screamed about risk. They warned about debt. They predicted collapse. So Strategy built a shield, a $1.44 billion US dollar reserve, enough to cover more than 20 months of obligations, sending a clear signal. This wasn't reckless, it was calculated. Tom Lee publicly called Strategy the ultimate Bitcoin proxy stock, explaining how institutions quietly trade it to gain exposure, not just to BTC, but even Ethereum. That's why its stock moves harder than Bitcoin itself. Bigger pumps, sharper drops, higher stakes. And here's the twist most people missed. While retail investors were panicking, giants like BlackRock, JP Morgan, and Vanguard were beginning to quietly warm up to crypto. This isn't chaos. This isn't luck. This is positioning. And now, let's get more of the insights from Phong Lee and Tom Lee.
Well, look, we've been doing this for 5 years now, and we've seen the Bitcoin winter of 2022. And what happened when Bitcoin went down is we just kept going on with our strategy, which is issuing equity and debt and raising capital at a premium to our net asset value and buying Bitcoin in a creative way. Maybe we do it a little bit slower in a down market, but we just continue with our strategy, and we've been very successful doing that.
What is your average entry price at this point? Because if you had just if you bought all the Bitcoin 10 years ago, that'd be one thing. But if you've been buying all the way up, then presumably some of them are in the red as it's corrected.
Yeah, our average price is around $72,000, so we're still positive on our total Bitcoin purchases.
What happens if it goes below $72,000?
If it goes below, look, we've seen the up and down cycles of Bitcoin, right? And again, we saw this in 2022. Nothing really changes. We trade down a little bit when it goes below $72,000, but you have to be, we're believers in the long-term asset class, right? We believe that Bitcoin is going to go up over 20% a year for the next 20 years. It's been doing that for the last 18 years.
So it's one thing if your kind of average entry price goes into the red briefly, as it might if the price goes below 72,000. But what is the level at which you might not be able to meet your debt obligations?
We have, as you probably know, we just built up a US dollar reserve of $1.44 billion, which covers 21 months of our debt obligations, which is around $800 million a year. And so that'll last us 2 to 3 years to 2029. And then we have 72 years worth of Bitcoin on top of that. If you assume for a minute a downside scenario, Bitcoin gets cut in half, we'll still be able to make it through to 2065 before we're not paying our debt obligations. We have quite a long runway with our assets that we have in our balance sheet.
Hey Phong, it's Tom. My question to you is, I'm trying to figure out what exactly you think has been one of the primary drivers for the volatility that we've seen as of late in cryptocurrencies and Bitcoin in particular. I want to kind of play for you something that we heard from Tom Lee who's BitMine Immersion's, executive chairman over there right now. Just talking a little bit about the risk sentiment, I want you to take a listen and see what you think.
MicroStrategy is probably the most important stock to watch right now because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that are the proxies. So that's the MicroStrategies.
All right, so you heard Tom Lee just there, Phong. Do you feel as though your company has become this kind of proxy instrument for Bitcoin in the public capital markets? And because of that, people have had to use your company as a way to structure certain types of views, whether they're long or, in Tom Lee's thesis case, to the downside and short.
Yeah, that's why when Bitcoin has a 50 ARR, 50 vol, we have a 70 ARR, 70 vol, which means that in times when Bitcoin's going up, we go up more. When Bitcoin goes down, we go down more. When we entered this Bitcoin treasury strategy in 2020, we were a way for people to get access to the underlying Bitcoin through public equities. ETFs changed that a bit in 2024. But yeah, we very much are a big part of the crypto ecosystem and the Bitcoin ecosystem, which is why we decided a couple weeks ago to start raising capital and putting US dollars on our balance sheet to get rid of this FUD. And it really was FUD. We weren't going to have an issue to be able to pay our dividends. And we weren't going to likely have to tap into selling Bitcoin. But the narrative that was created, and I don't know where those things get created on social media, the news, the internet, by big banks, by big government, by environmentalists, by Luddites. There is FUD that was put out there that we wouldn't be able to meet our dividend obligations, which causes people to pile into a short Bitcoin bet. And we put that, we just addressed that. In 8.5 days, we raised $1.44 billion, 21 months worth of dividend obligations. And we did it, one, to address the FUD, but two, to show people that we're still able to raise money in a Bitcoin down cycle.
You mentioned the FUD, right? The fear, uncertainty, and doubt aspect of this whole thing. Do you believe as though this long-term thesis for investors in a company like MicroStrategy or a BitMine Immersion or any of these treasury companies is about whether or not the viability of cryptocurrencies overall has real runway, or are the bubble fears really just something that are going to be headwinds for you guys no matter what?
No, I think they're bubble fears. I think we're at the point, you could argue 3 years ago, certainly 4 or 5 years ago, there were concerns around whether cryptocurrencies had a utility. I think we're past that. I think we've passed the Overton window. I think the U.S. government's proven that. Look, even now we have Vanguard and JP Morgan capitulating, who have very well-known CEOs who said that they didn't think there was value to Bitcoin, and now they've changed. The dynamic, if you take a step back, is Bitcoin's gone up 45% a year for the last 5 years. Right, it's one of the best performing asset classes in the world. You can take any small segment of time, like the last 2 months, and say we're in a down cycle. Bitcoin is going to go away. Cryptocurrency is going to go away. But you have to take a step back. You have to have some time in hands. And you have to realize this is just volatility.
Would you ever sell, Phong?
We would sell if we got to the point where we did not have the liquidity and we didn't have the US dollar access and we couldn't sell Bitcoin derivatives. But like I said, that's 2065 until we get there. I don't know what you're doing in 2065, but I don't know that I'll be doing this in 2065. And maybe at that point, we might have to sell Bitcoin if we have a sustained 40-year down cycle.
Do you think the price of Bitcoin goes ever higher in perpetuity? Or is it just that it'll get high enough and stay high enough that your strategy is fine?
I think it'll go higher for the next 20 years, and I'm very bad. I'm bad at predicting things 5 years out. So I think after 20 years, we'll have to see what's next, what new innovations are in the marketplace. Maybe something else will come along. But I think Bitcoin has a pretty long runway.
All right. Phong, thanks for joining us today. It's good to check in with you, and we hope to check back in soon.
Thanks. Appreciate having me.
Yep. Phong Lee of Strategy.